Alrighty, traders, let's jump into today's session on trading leaps. So I'm going to cover how I trade leaps and turn it into a consistent trading strategy for me. And I don't trade leaps maybe like everybody else does, but it's worked well for me. I'm going to share exactly how I trade them. So let's dive into the strategy now and cover how I'm going to trade leaps here. Which I think to me is one of the best strategies that I've come across, along with the 112. So I think these are two of the best core strategies. You pair these up with strangles, the 112, and you've got three fantastic trades I think that you can make a lot of money with and be fairly safe. So let's dive in a little bit. What are leaps? Leap options stand for long-term equity anticipation securities. So leap contracts, these are long-term option contracts with an expiration date it's typically more than a year away. I mean, you can call it 6 months, 8 months, 9 months, but usually people refer to a leap as something that's a year or more. And that's really about what we're going to talk about today. Stuff that's close to a year old, give or take a couple months. And then leap options also offer traders the opportunity to take a longer-term position on the price movement of an asset. And it's key to remember that for us, trading leaps gives us a lot of time to be right. And I think that's what I like. I'm so tired of trading stocks and options and putting put spreads and stuff on individual stocks that are 30 and 45 days out, naked puts on stocks, and then some guy comes out and says something and tanks the stock 20% overnight because some guy makes some comment. So I want to give myself more time to be right. I want to increase my winning percentage. I like to be right, and I like to be right often. And leaps allow me to do that. Now, why do we trade leaps? Well, I think a couple keys here. Number one, they're long-term. As we've said, leap options have an expiration period of at least 1 to 3 years from the date they're issued. Some may even be longer, but it gives us a long opportunity to be right. It doesn't mean that we're going to be in these trades long, though. And you're going to find that out in a little bit. Number two reason I like trading leaps is you get higher premiums. Because of their extended expiration period, leap options generally have higher premiums compared to standard options with shorter durations. That increased premium is going to provide you with more time to be right, as I said, about the direction of the underlying asset's price. And stocks, in the end, usually only go up. Most stocks usually only go up. The market usually only goes up. Yeah, there's periods of bear activity, and there's periods of pullbacks and sell-offs, but in the long run, stocks really have just gone up. So why fight that trend? I like to have something that I know is typically going to be higher a year from now, which gives me a chance to be right. Another great thing about leaps to me is I can get further out of the money for good premium. So not only do I get higher premiums because they're longer term contracts, so I'm automatically getting higher premium because I'm getting paid for a larger range that the stock can move. So I'm getting paid more premium, but I can also use that to my advantage to get further out of the money and still get good premium. So now instead of trading, 15, 20 delta, I can get farther away, like 12 to 14 delta. You could even go 5 delta, but you can get further away from the money and still get good premium. And then the last thing here is reduced buying power. So leaps typically require a little less buying power over the term of the asset or of the option. Which is definitely beneficial to investors that have limited capital, or you want to increase your overall return on capital. When I'm outlaying less and I have a decent return, I'm going to have a much higher return on my capital. And if you're trading 30 to 45 DTE and you look at the buying power on those, divided by the 30 days, and then you look at leaps buying power and divide that by the 360 days or 65 days or 350 days or whatever, the buying power per day that you're actually using on leaps is significantly less than something that's shorter dated, which means if I get a decent return on a trade, then I'm going to have a higher return on capital overall. So I'm actually allowing my buying power to be lower, but I'm increasing my overall return on capital, which is the key to the strategy I'm about to show you. A couple quick notes, though, is on leaps, they can have limited liquidity. Certain leap options might have lower trading volumes. Well, most leap options have some lower trading volumes, but in some stocks, they can be significantly lower volumes and less liquidity compared to standard options with shorter expiration periods. So reduced liquidity might lead to a wider bid-ask spread, which might overall impact your cost of trading. So something to be cognizant of. I don't trade just any stocks or ETFs anyway, so I'm very specific on what I'm trading, and typically what I'm trading is a lot more liquid than other options. All right, so let's now take a look at why I'm an option seller overall. Before I dive into my strategy, I'm just going to give you the prelude here is, I'm an options seller. I'm a theta trader. I like to get paid to wait. And income generation is my number one goal. I want to make money. I don't care about the percent return. I care about the dollar return. I want to make more money. Yeah, you can tell me all about your 100% trade that you had, or your triple bagger, or your whatever you want to call it, your 300% return on an out of the money call that you got lucky on or something. I don't care about that percent. What I do care is that I'm making a consistent amount of income every month that's meeting my core goals. And selling options allows me to collect premiums up front and generate immediate income, and gives me consistent income. Even in low volatility markets, I get paid to wait, and I get paid up front. And I like the meter drop. You get into a cab, as soon as the meter drops, there's already a $5 charge. Okay, no matter how far they take you 1 minute away or 5 hours away, and you're still paying the $5 meter drop. Something Wade Cook brought up many years ago. They're the meter drop principle. I 100% believe in that. Love the fact that I get paid up front to wait and make these trades. So time decay is the next piece here. Theta works for me, not against me. So all options have a limited lifespan. Their value will decline as they approach the expiration date. This is known as time decay or theta decay. So by selling options, I'm taking advantage of time decay working in my favor versus against me. If you're buying options, not only do I have to be right on direction, I got to be right enough to overcome the theta decay of the extrinsic value in the option. So if it expires worthless as well, I can retain the entire premium in time decay. If it expires worthless and I'm buying options, well, I'm out the entire amount that I paid. So I love time decay. I love theta. I want to get paid to wait. Also, selling options gives me more ways to win. I don't have to get direction right. I don't have to get the exact timing right on the trade. Theta is not working against me. So when I'm selling options, I can be right if the stock goes up. If I'm selling options, I'm definitely right if the stock goes up. I'm right also if the stock stays the same and doesn't move. I'm also going to make money if the stock drops, as long as it doesn't drop far enough against me. So I like the fact that I have multiple ways to win. The only time I'm typically going to lose is if the stock drops significantly against my direction. I only have to pick out where I think the stock is not going to fall to, not where I think it's going to go. And I get paid to do that. It gives me a higher probability of success. I have a much higher win rate. Again, I like to win. I like to win often. So when you sell options, you can structure your trades to have a higher probability of success. So for example, if you sell an out of the money option, you have a much lower likelihood of being exercised than an at the money option. And that underlying asset has to move significantly in order for me to be impacted. Now, if I'm an option buyer, that option needs to move significantly to overcome the premium that I'm paying. When I'm selling, I'm getting paid the premium. Life is good. So it's essential to understand that both selling options can, and buying options can include risk, but selling options should help you minimize a lot of that risk as long as it aligns with your financial goals and your risk tolerance. All right, so let's cover my 2 leap strategies. And I'm only going to focus on one today. We'll do another video on the other. I have 2 strategies that I use for leaps. Number 1 is I love to sell leap puts. I love selling naked leap puts on particular underlyings. Another strategy that I employ is what I call a free leap call spread, completely different type of trade. This is an actual buying and long type of trade than short selling, but we'll talk about that or selling, I should say, not short selling, selling options. So I'm going to talk today about selling leap puts, which is one of my favorite strategies out there. So let's talk about it. Trade risk and sizing. When you trade, again, if you go back and read my trade rules, my trade plans, I never risk more than 2% of my portfolio value on any one trade, so I'll size appropriately. I never allocate more than 30% of my available trading buying power to any strategy. My available trading buying power is always around 50% of my net lick. I will not allocate more than 30% of that 50% to any one strategy. Okay, so about 15% of my overall net lick is what I will allocate for this particular strategy. Now, understand too, the risk here is that you can be assigned shares of the out-of-the-money short puts. Be aware of that if you do get assigned, do you have the ability to handle that particular trade? But again, as long as I'm sizing no more than 2% of my portfolio, I feel pretty good if I lose on this particular trade, which is going to be very, very rare, as you'll see. All right, the underlying. So what do you trade? SPY is my favorite weekly trade underlying. I love to trade SPY every single week using this strategy. I'm going to cover that more in depth in a little bit, but SPY is my number 1. I don't like individual stocks. I've said that before. However, I will look at some top growth stocks or companies out there, Apple, Microsoft, maybe Boeing, other big names that I feel much more confident in over the long term. I will also look at select assets that may be coming off a weekly oversold or support level. If assigned, it's okay to wheel. It's all good with me. I don't prefer it. But the one thing I want to mention here is that I don't want to own any stocks. I don't own stocks in any accounts, IRAs, trading accounts. I never own stocks. I hate stocks. I hate individual names for the most part. I will trade some very large names periodically, but only as leaps, no other trades. I don't want to get assigned and own it. If I get assigned, I will wheel out of it and get rid of it as fast as humanly possible. I will sell calls exactly at the price I'm assigned at just to get rid of the stupid stock. Okay. I hate stocks. I don't want to own stocks. I will own SPY though. So SPY is the one underlying I do not mind getting assigned on. If I take an assignment on something and I'm 20% down from where the current price is on SPY, fine with me. I love the quote, "He who dies with the most SPY wins." That's a great philosophy. I don't mind owning a ton of SPY because and I know that over time, SPY will continue to go up. And I love the fact that it's a basket of 500 different stocks versus one individual stock that can be sunk by a phrase, a word, a earnings report, a news flash, a whistleblower, who knows what can sink any stock out there, at least temporarily, and it can be hard enough to cause you problems. So very hard to do that when you own a basket of 500 or 1,000 stocks. All right, so there's my underlyings and a little T and A here. So a little TA, I don't want you to get crazy about this. You can use some basic charting on these. I like to look at the weekly charts for these because they are leaps. Daily charts don't do you a whole lot of good on something that expires in 365 days. You don't have a chart big enough to tell you what's going to happen there. But the weekly chart, maybe, I don't even think the monthly, but the weekly chart gives you some ideas. So I like MACD and RSI rising from oversold. I like it when they're oversold and they're breaking back up through the 0 line on the MACD or back through the 50 on the RSI. When they're already oversold or under those levels, I like it on the weeklies. I don't plan on being in these trades for months. Okay, so even the weekly is a little bit far, but it's still a little bit better than the daily. I also like weeklies coming off support or moving averages. I look for weekly PSAR reversals. If you don't know what the PSAR signal is, go ahead and check that out on your local trading platform. I will also look at the daily. I'm looking for anything coming off support or oversold. I'm looking for a 30-day move, hopefully, or a 30-day non-move, but a 30-day slightly bullish move. Okay, is what I'm looking for. I can go longer and I can hold these for up to a year. Okay, but I'm really looking to get out of these in about a month or so. So just a little technical analysis, I think, can help you identify stocks that are oversold, good quality stocks that might be ready to move higher. Now, data entry or days to entry and days to expiration here. So my trade entry, I'm going to go out about 365 DTE. So 365 days. I'm really not going to go much higher unless I'm looking at something and it's at 370 or 375. Then that's fine. Otherwise, I will go the next shorter strike from there. DK that you're going to get at 365 DTE is still going to be good enough to get you out of a trade in about a month or so. So it's still going to be good enough to get you out of a trade in about a month or so. It's not like a 45 or 60 DTE option that maybe you're out of in a couple of weeks. I'm going to be out around 30 days, but I'm not going for as big of a percentage. So I'm okay decaying over in the next month or two. And if I need to, I will go to shorter, maybe 300 DTE, maybe slightly less if there's no 365 available out there. So that's what I'm looking at. I'm going to go out to 365 and try to find that individual particular strike. And what strikes am I looking at? I'm typically looking at the 12 delta puts. I will go 14 on some of these, SPY and others, depending on the premium and what's going on. But in a low vol environment, 12 is probably a little bit better. In a higher vol environment, 14 might be a little bit better because I get a little bit more premium for those. I can move it around a bit, but that's really what I'm focusing on. I'm going to focus on 12 most of the time. I'm going to look to get as close to 25 to 30% of credit to my buying power ratio. So if I'm going to use $1,000 in buying power, I'd like to get somewhere in the neighborhood of $300 or $250 for that trade. So about a quarter to 30% of the buying power is what I want in income. Why is that? Well, because if I have to hold this for a year, I want it to get me 30%. 3% a month is always my goal. 30 to 36% a year is always my goal. Yes, I can beat that in many cases, but as long as I'm putting a trade on that's netting me, like I said, $300 on $1,000 in buying power, that's a 30% return. If it takes all 12 months to get there, all 365 days, I'm going to make my 30%. I'm fine. I don't want to take 10, 15% because if I do have to hold this longer, I'm not going to get the same return on capital that I could be using in some other trade to generate my 3% a month. So there's my trade entry strikes that I'm looking at here. So let's take a quick look. So I popped up just a quick SPY trade from today. You can see that this trade is going to take in $6.33. This happens to be around a 13 delta. That was at the close of trade today. It was 12 when I looked at it earlier, but about a 13 delta put, the 375 put taking in $6.33. So $633 is my max profit, and my buying power is 37.37. So you're taking in 633 using $3,737 overall. It's a little light. It's only about 17%. I'd like to get closer to 20, so I might move this a bit higher. But you can get a sense of what we're looking at on these particular trades. SPY is a little bit of an anomaly. I will typically go a little under 20% on SPY, and there's a reason for that. Most other underlyings, I really want to hopefully get that 20 to 30% on those. All right, so there's where we are on what it looks like. How do I manage these? Simple. I close these for 30% winner. I'm hoping to get out in around 30-ish days or so, about a month, but I'm trying to close at a 30% winner. So 30% of the premium I received is what I'm looking to take out of this trade, and that's where I'll close it. So as soon as I get 30% out, I'm out. I will close any losers for a 3x stop, which is a 2x max loss, or potentially I'd be willing to take assignment and let it go further if need be. These are so far out of the money that taking assignment is not a problem for the most part, because you would assume that in most cases stocks will go up. If I look back at this particular trade here, you're looking at the 375 put here on SPY. Now, SPY closed today at 457. So if you think of 458 roughly, so 458 on the day, I'm selling the 375, which is 83 points out of the money. So 83 points again on that 458 that we were talking about is about an 18% downside. So are you willing to take assignment at SPY at an 18% haircut from where it is right now a year from now? Yeah, I am. Again, whoever dies with the most SPY will win in the end. Why not get paid to own SPY at an 18 to 19 to 20% discount? All good with me. I can hold on to it. I'm fine with that. A secondary stop for me would be to potentially close at 21 DTE. This would be an extraordinarily rare circumstance that would happen, just to avoid any gamma risk at the end of these trades. So I would probably look to close it out. Or again, if I'm taking assignment, I'll let it run. But for me, for the most part, I will look to take a 3x stop, and I will look to either close at 21 DT or take assignment, depending on the stock and what it is. All right, so let me talk about the SPY strategy that I use. My SPY strategy is that I will add one SPY leap, however many contracts to size appropriate to your account, but I'm adding one SPY leap trade. I shouldn't say one SPY leap contract, really. It's one SPY leap trade. So I am adding a SPY leap every single Monday. So I'm adding SPY leaps every single Monday. I will take them off as needed or directed when they hit my 30%. I'm going to ladder up to 10 of these, or up to, again, 30% of my total available buying power, which is the maximum amount for my strategy. But I will ladder up to 10 of these. If you consider the SPY and its buying power at 3,700 a trade, you're looking at about $37,000 or so if you have 10 of these on. Typically, you're not going to get to 10, but 10 of these would mean you were not able to close a single SPY trade for 2.5 months, which is a pretty rare sighting, but anything can happen. I will stop if I get to 10, and I will take a break until one closes at that point, or they start to close. So that's my SPY strategy. How did I come up with that? Well, here's a back test in options Omega. Here, when I took a look at SPY, I put this trade on every Monday, allocating 10% of a $100,000 portfolio. So I'm allocating about 10 grand to this strategy. I put this through the paces here: profit target 30%, stop loss 200%, which is not really a stop loss, it's really your max loss. Putting them on every single Monday. This generated over the course of 2 full years, from January 2021 to June 30, 2023, this generated a cumulative return of about 40% annually a year, 45% a year. It took the P&L up to $149,000 from $100,000. Average winner about $300 per lot, and the average loser, there wasn't any. So this trade did not have many, had some drawdowns, but not any losing trades on it. I do expect losing trades to happen, but we were able to turn $100,000 into $249,000 in a 2-year span. So you're averaging, again, around 45%. It's a back test. Is it accurate? Is there blips in there? Who knows? All I know is that it was a very positive test, and I'm going to show you my results as well against this back test. Now, I also ran another back test. We can't do a lot of options. Tesla did not fare well. However, Apple did. So Apple, we actually did the exact same trades using Apple, and it gave us a whopping 64% annualized return. We took a $100,000 account, turned it into $339,000, almost $340,000 account in just a little over 2 years, 2.5 years on this, and showed a phenomenal win rate as we looked at it. So we did not have any losing trades coming up. Again, we are at 12 delta, so we're pretty far out of the money. But if you looked at Apple, it really didn't get hit like some of the others did. So this works phenomenal in both SPY and in Apple. I'm waiting till Apple's earnings come out this week, and we will rekindle doing the Apple version. And I'm going to share with you my results on all of my Leap trades for the year. I have a 97% win rate. Okay, so not the 100 that the back test showed. I have lost 1 or 2. So I have a 97% win rate on these trades. The average days in trade over all of the leaps that I have done this year, all that's SPY, Tesla, Apple, and many other trades that are in there, all of these different trades, the average days was 40.7, so just over 30 days. So it takes me 40 days to get to 30% premium capture on these. The average return on capital for this trade was 6.99, basically 7%. So I'm averaging 7% return on capital every 40 days. Okay, so if you're thinking of making 7% every 40 days, okay, imagine what that percentage is going to be at the end of the year. It's actually going to be about a 64% return. I'm not compounding it either, but that would be about a 64% return. Is that going to be feasible? Is that going to happen? I have no idea. Do we hit a recession? Does the market go down? Are we going to take some losses, or are we going to be stuck, maybe not taking losses, but maybe we're maxed out on the number of trades because the market's dropping, we're not decaying enough, quickly enough, and I can't take any more trades off or on. I might get stuck for a couple of months. As you saw in Apple here, you saw some very flat areas where, hey, we just couldn't take any off. We weren't losing. And then once started coming off, we started winning again. So that's what I'm seeing in this trade. It's been a fantastic trade. I think it's one of the greatest trades that I have, that I've really used. I don't know who else does it. I know when people talk about leaps, most of the time they're talking about, cash secured or something in an IRA. This does not work great in an IRA because in an IRA, you're going to be cash secured. This works well in a trading account, and it will work even better if you have a PM account. So if you're trading with portfolio margin, unbelievably great returns. In a standard Reg T margin account, really good returns, which is what I'm showing you here. So this particular account that I'm trading in happens to be just a regular Reg T account that we use in the Income Navigator service as our trading portfolio. But I do have PM accounts, and the amount is increased quite a bit more, and you're able to put more trades on. I think it's a fantastic trade. I'm not selling stocks that I want to own because I don't want to own any stocks. I will sell stocks that are of high quality, which is a similar type of mental framework, but I'm only doing these on pretty good companies. I'm not trying to wheel. I don't really care about the wheel strategy with these. You can wheel yourself all you want. I have a specific wheel strategy. We'll cover that at some point in time. That's not my goal. My goal is not to, if I get assigned, I'll wheel my way out. It's a leap. I'm trying to get out at 30%. I'm trying to make money every month. I don't care about, getting assigned and holding on to a stock I love because I don't love any stocks. Okay. I just want to make money. And this is a fantastic way to do it. All right. That's it. If you have any questions, you can drop them in comments here on the YouTube channel. Otherwise, if you like this video, click the like button. I would appreciate it. We can help a lot of other people. Go ahead and subscribe to this channel. I'll be more than happy to help you guys out with some other videos. It's a great strategy for me. If you want to know more about our Discord group and what we're doing, check that out in the description. Go ahead and sign up for that. You can see exactly how we're trading, what we're trading, and how we're able to generate a pretty significant cash flow. We were up 80% last year. We're on a great ride this year so far. So if you like this, follow us, like this, and I'll see you guys on the trading floor. All right, take care, everybody. Enjoy a great rest of your trading day.